Hey, what's up, guys? Welcome to Q&A with James J. Today, we're going to discuss the dreaded Homeowners Association. If you work for an HOA, I'm kind of joking, kind of. All right, so talking about Homeowners Association dues specifically and how they get calculated, how we use them in your credit debt to income ratios, and then also some things that you want to consider if you're looking at a condo, for example, okay? Specifically, all right? So this is going to be a short episode of Q&A with James J today. So let's get into it. So homeowners association dues, okay? This is super important because this can actually disqualify you from qualifying for a home, all right? People don't think about this. They don't think about this because all they're looking at is what the monthly payment is as far as taxes and insurance goes, right? And mortgage insurance, if you are getting an FHA loan, if you're getting a conventional loan, you're going to pay the mortgage insurance. Of course, on conventional, if you don't want to pay mortgage insurance, you put down 20%, no mortgage insurance, okay? But that is where people focus most on. They focus on taxes, insurance. That's it. That's all people think about, taxes, insurance, principal interest, right? So we call it PITI, all right? We should call it PITIH, all right? Principal interest, tax, and insurance, and homeowners associations. Now, I understand everybody doesn't have a homeowners association, okay? I get it. I also understand the majority of people that I help are in the neighborhoods that have a homeowners association, okay? Newer neighborhoods are probably virtually all of them are probably going to have homeowners associations, okay? So I'm bringing this up because, again, this can keep you from qualifying, all right? If you are getting a home and we are calculating debt to income ratio, okay, we're going to look at the, obviously, principal interest, taxes, and insurance, all right? That is the main part of it. However, when we're doing qualifications, okay, we actually have to qualify you with your homeowners association dues in there, okay? So for easy math here, just say your homeowners association is $1,200 a year, okay? Typically, homeowners association dues are paid quarterly, maybe they're paid annually, all right? Those are probably the two main ways they get paid. There might be some other ones out there, but typically you're going to either pay them on a quarterly basis or annually, all right? You're going to pay it one time, okay? What we do in order to make sure that those HOA dues get paid is we're going to take that $1,200 and divide it out by 12. Okay. So it's $100 a month, $100 a month. Now I have to add that to your debt to income ratio. Okay. So now I have to factor in the principal, the interest, the taxes, the insurance, and then I add in that $100 for the HOA. Okay. You have to qualify with that homeowner association due in there. Why? Because you can lose your home if you don't pay your homeowners association dues. They can take your home. All right. It rarely happens, but they can take your home if you don't pay your dues. So as a lender, we have to make sure you qualify to be able to pay those HOA dues, although it is not paid on a monthly basis. Okay. So if you're in a home that has high homeowners association dues on an annual basis, just say it's higher than that. Okay, you're in a neighborhood that has pool, slides, they got water park, all this other stuff. All right, maybe the HOA dues are higher than 1,200. Right? Maybe they're 200. Excuse me, 2,000. Well, now we have to take that 2,000 and break that down over 12 months, and we factor that into the debt to income ratio because, again, it has to be paid. You have to pay your homeowners association dues. It just doesn't have to be paid on a monthly basis. But as a lender, we qualify you based on monthly. What that number is over the course of a month, that is what we do. So let's talk real quick about townhomes and condos, okay? Because it's really, really significant if you're looking at a townhome or a condo. I would say a little less significant on a townhome versus a condo. All right. Why? Okay. Well, there's common space. common space that you don't take care of when you're in a townhome and a condo, especially in a condo. All right. So let's just start with townhomes, because townhomes, you might have a small yard that you have to take care of, but there's a lot of common space in neighborhoods that are townhome neighborhoods, right? So the HOA takes care of a lot of that common area, which means the homeowners association dues are typically higher in a townhome versus a single family home. So this also can also keep you from qualifying. So you got to keep this in mind when you're looking, right? So you just, I have people that say, I just don't want any maintenance, right? They want a townhome or a condo. Well, that's great that you don't want maintenance, but guess what? You're going to pay for it. You're going to pay for it. And then you got to have that conversation. First of all, is it worth me paying two, three, 400, sometimes just more than that on a condo, especially? Do I want to pay another $300-$400 a month on top of my mortgage payment? For some people, the answer is yes, right? But we got to make sure you qualify. So if you're in an HOA that is $300 a month or $400 a month, well, now we have principal, interest, taxes, and insurance, plus another $400 on top of that for your HOA. And the thing about condos and townhomes, typically those HOA dues are actually monthly. They're every month. So it's not, hey, here's 1 year of a bill. Typically, it's every month you pay it. All right. So it's not like owning a single family home where they send you a bill once a year or once a quarter. It's actually paid monthly. So you got to keep that in mind when you're looking at, what do I want to live? Do I want a townhome? Do I want an HOA? Excuse me. Do I want a condo? Because the HOA dues in both of those are typically going to be higher than most single family homes. All right. I'm generalizing a little bit, but I've seen this a lot. It's pretty accurate. Okay. Condos for sure. Sometimes it's just outrageous what the condo association charges. So you got to factor that in. Do I really want to pay this extra money? You might be better off buying a single family home and hiring somebody to do the maintenance for you. It'd probably come out better doing it that way. So I know sometimes people just don't want the maintenance of a house, or excuse me, a big house with a big yard, or a little yard, small yard for that matter. But you got to really think about, is this condo really worth it? Is this townhome really worth it? And trust me, I'm not hating on either one of them. I don't care. I just want people to know, when you're looking at, especially condos, right? The HOA dues are sometimes, it will disqualify you from qualifying because they're so high. So keep that in mind. I wanted to address this because I have a few people that are looking at condos and townhomes right now. And this is a really, really important question that came up, because again, you might go from qualifying for a single family home of 120 grand versus a townhome that is 120 grand, but has a $300 HOA. Right now, you don't qualify. So you might be on the borderline. I'm using 120,000. Throw whatever number you want. I mean, 200 grand, 300 grand, it doesn't matter. If it's a condo, you got to really look at those dues and ask yourself, do I really want to spend this kind of money? Maybe. I don't know. It's a question you got to think about and ask yourself. And then again, the lender has got to qualify you with that HOA dues. And this just knocks a lot of people out of qualifying just from the HOA dues. So if you guys have any questions about this, please hit me up. You can send me a DM. You can go check out TexasMortgageBuyers.com. My number is right there at the bottom of the screen as well. And I'll be back on to answer some more questions next week. So hope you guys are having an awesome day. And I'll catch you guys on the next episode. Q&A with James J. Y'all have a great day.